Hi, hello, welcome to Letham Trading. Now we are going to see Nifty backtesting for the month of October, and we'll analyze how many times our stop loss hit and how many times our target hit and what are the days where we can't take a trade. Okay, and before going to the video, the first thing is we will use three indicators. One is CPR, and the next one is Camarilla, and the third one is 20 MA. I'll show you what is CPR and what is Camarilla. See, this is CPR. This blue line and this pink line is the CPR, and the points above above this CPR are Camarilla points, and below the CPR are called L3, L4 and L5, and the points above CPR are called H3, H4 and H5, and this yellow line is the 20 MA, right? The first thing what we observe is the CPR relationship and the width of the CPR, and we'll take a trade at Camarilla points. We will see the first day of October. And remember one point, we'll always wait for almost 80 to 100 points in a day. See the CPR width. The CPR is very wide, right? See, from 960 to 9050. So it is almost 90 points. And observe the first 5 minutes. The first 5 minutes candle is near to the CPR and it is slight gap down. Okay, the first 5 minutes candle is an indecisive candle. Whenever the market opens near the CPR, we will definitely wait for some time for a clear price action, whether the market is going to break to the upside or the downside. Okay, we'll wait whether the market is going to break on which side. So the first three candles are not giving any price action. We'll see at what side the market. Okay, this candle is there, right? This candle is giving the direction that the market has clearly broke CPR. But here the point is, we don't take a trade just by breaking the CPR. We need a retracement. At least at central CPR, we will take a put position. Otherwise, we will avoid the trade. If the market breaks the CPR and if it comes down, then we don't take a trade. If it retraces to central CPR, then only we can take a trade. We'll see whether it will get retraced. Yes, the market has clearly retraced. So here, will you take a put position? No, the candle is not confirming me, but we'll take a put position. But at where? Here at this point you can take a put position and your target will be up to L3, only up to L3. Okay, the market has clearly reached L3. See, without this strategy, without our strategy, this is really a difficult day today. In this difficult day also, we have taken a trade, and that is put position at the central CPR. Always remember, when it breaks, we need a retracement on downside. When it goes to the upside, why we need a retracement here? Because breaking this L3 is not so easy. If it is to the upside breaking, then there is no need of retracement. That is, if it breaks to the upside, then there is no need of retracement. So we will move on to the next day. The first day our target was hit, and we'll see for the next day. The next day the CPR is a slight CPR is overlapping CPR, and observe the first 5 minutes candle. The first 5 minutes candle is a gap up and it is near H5. So whenever the market opens gap up, we will definitely wait for some time for a clear price action. The first thing is whether the market, see, this 20 MA is going to near to the graph, or the graph is coming near the 20 MA. That is what we observe. With that observation, we will have a price action. Okay, we don't take trade until that point. If we see a price action, then only we can take a trade. I think this 20 EMA has came near to the graph, right? See, here the market is there and it is consolidating, and this 20 MA has clearly reached to the graph, so the market is still bullish. That is what I feel, and we can take a call position here at this point, and the stop loss will be below this 20 MA, and see whether our target was hit. It is complete consolidation, but it is not a stop loss day. But see, if you take a call position here at this point 2082, yes, it reached 50 points, but I suggest you to don't take a trade this day. It is just consolidating whole the day. If you are an option buyer, your premium will get it, but according to our price action, this is not a stop loss hitting day, but you can't book more profit, right? And we will move on to the next day. The CPR is in uptrend now, and the market opened above H4, right? Here the market opened above H4, and that is a reversal candle. We don't have any price action, still we'll wait for some time. The second candle also not giving any price action. Most of the time when the market opens between H4 to H5, we don't take a call position. We'll see for a put position only, but it need a clear reversal. If it is going to the upside, we just avoid taking a trade. Yes, we are just avoiding taking a trade. And if you see this candle, moreover, the market was clearly sideways. It was just a sideways day. The first candle itself giving the indication that the market is just sideways. See, where you can take a trade. There is no point of taking any trade because the market is already overbought. See, and here if you see a rejection candle, then you can go for the trade. But where is the rejection candle? I don't see any rejection candle. So there are some days where you should not take a trade. This is the day where you should not take a trade. So we'll move on to the next day. See, this is an uptrend CPR, and this is almost an average CPR. And observe the first 5 minutes candle. Here the first 5 minutes candle is a bullish pin bar, but it is facing a resistance at this previous day high, right? But it is a bullish pin bar. So these are the days where the market will consolidate for some time, but see, we need some price action, right? If the market goes to the upside, we don't take it, right? But if it retraces, then we can go for the call position. Where you can go for the call position? When you see a clear confirmation candle with this supporting line. Okay, we'll see. Remember this. Here, if you see this graph, the first thing is this is H3, right? Here this is H3, and if you take a call position just because it has crossed H3, there is previous day high. So it is not an easy day to take a trade because the market has formed bullishness, but it is again crossing this H4, AL4, and again it went up and it got rejected at 20 MA. So we don't see a clear price action. We'll see. We just in these type of days we'll just observe the market. See, almost it is an uptrend CPR, right? But it got rejected at this candle. We are very sure that the market is not going to be bullish at this point, but at this point I feel like by seeing these candles, I feel like yes, there may be a chance of the market to go up from this point, but from 282 this is up to 330, that is almost 50 points only. So, but what is our target? Our target is here, that is 340. So here, if you take a trade here at this point, 270 to 340, it's of 70 points movement, but it was not reached. Our target was not reached. It just got reversed from that place, and yes, definitely our stop loss was hit. So one stop loss, and we will move on to the next day. The CPR is in downtrend now, and we'll see where the market opened. It is a huge gap down, so we'll wait for some time for a clear price action. At 20 EMA, we'll see whether the market, I feel like the market is going up here at this point, but before crossing this wick, don't take any decision. Yes, it was clearly breaking this line, right? So this is the place where you can go for the call position, and your target is up to this L4. It was clearly reached, and we will move on to the next day. Next day, the market opened between CPR. So the first candle is inside the CPR. So we'll see whether the market will break to which side, and then we'll take a decision. Okay, yes, the market has clearly broke to the downside, and we'll see for a retracement. Without retracement, we don't take a trade. If you feel it is a retracement, you can take a put position here, but if you miss to take that trade, then we'll see for some time. And see, here again you can take a put position. Here you can definitely take a put position, and your target will be up to L4. Yes, it was. Always remember, when the market breaks to the downside, the central CPR retracement will be a good thing. If it retraces to the central CPR, definitely you can go for the put position. For sure you can get your target. And we will move on to the next day. The CPR is very wide. Always remember, CPR trades are the difficult trades. You should manage the CPR trades, then you will be profitable. Observe the first 5 minutes candle. With first 5 minutes candle at CPR, we don't have any price action. We need a breakout to the upside or downside for a clear price action. So with the first 5 minutes candle is not included for our price action. So we'll see at what side it is breaking. Yes, it is breaking to the downside. So we will go for the put position only. And see what happened. Our stop loss was hit. Where we went for the put position, here by breaking this candle, we went for the put position, and our target will be up to L3, right? So our stop loss was hit for this day. So this is a second stop loss day. And we will move on to the next day. The CPR very wide, right? This next day is 13th. 13th also, again the market is inside the CPR, and also CPR relationship is also inside. So we'll see whether the market is breaking to the which side. Yes, the market to the downside. So we'll go for the put position. Here, why we are not going for the retracement? Because it is inside CPR. That is, the relationship between CPR is inside CPR. So just by seeing this breaking CPR or by breaking this L3, we can definitely go for the put position. and our target will be up to L5 or previous day high. You can exit at previous day high. That's not an issue because we'll get points. So we'll move on to the next day. The next day the CPR is in downtrend and the CPR is average. We'll see where the market opened. The market opened a huge gap up. I think we can't take trade with this type of huge gap ups, but we'll see whether what happens. Will this 20 EMA will go to this? Yes, the 20 EMA has clearly went up. So there is only call position, but it is up to you to take a trade or not, because it will not give you a good risk reward ratio, right? So avoiding a trade is the best thing on 14th also. So no trade on 14th. We will move on to the next day, that is CPR is in uptrend. And where the market opened, here the market opened near L3 and this is a reversal candle, but it is not breaking L3. So we'll wait some more time for a price action. Yes, the third candle is confirming us. Why we are not taking a call position after this? Because here it is taking support at L3, but there is a previous day high at above the second 5 minutes candle. So we'll wait for some more time. And we have CPR. This third candle is breaking L3. So we'll see for some time. See, if you went for a put position here at this point, you should stop and reverse and take a call position here at this range, because it just went up, right? So these are the days will confuse you, but you should stop and reverse your trade and take a call position here at this point, and your target will be up to central CPR. What is the distance from this point? Yes, 100 points movement was done. And we will move on to the next day where the market opened. The market opened a huge gap up, but where the market is at H4. So above H4, so we don't have a price action. We'll see at which point the market will go. Okay, complete day it is not giving any price action and we are not taking any trade. So again another no trading day, and we will move on to the next day. The next day is a narrow CPR and the first 5 minutes candle is a bearish candle breaking L5. So I feel there is a bearishness only. We'll see whether what will happen. I think at this point we can take a put position and we'll check. Yes, it is put position only. If you take a put position here at this point, I think your stop loss will not hit. Your target will hit. Alright. And we'll move on to the next day. The next day, the first 5 minutes candle, the CPR is in uptrend. So we'll see for a call position. Always remember, this 20th day candle, the first 5 minutes candle is a bearish candle, but there is L3 and today previous day high. So breaking that will take some time. So we'll again wait for some time for a clear price action and we'll take a trade. See, here this is a retest. The market has clearly retested this first 5 minutes candle wick. So you can take a call position at this range and your target will be up to CPR. Yes, it was clearly reached to CPR. And we will move on to the next day, that is 21st. On 21st, the first 5 minutes candle is a bullish pin bar, but the CPR is an outside CPR. We will wait for some time. We don't take a call position, but we can take a put position here at this point. Yes, it was clearly after hours of consolidation, our target was reached. Why we took a put position at this point? See, it is a reversal, and you can take here, and your stop loss will be above CP, above this H4. So our target was reached. See, always remember H3 to H4 range opening will be a difficult trade. And we will move on to the next day. The next day where the market opened, again gap up. See, October month is very different type of markets are coming. See, gap up, gap down, everything is completely different. And see, it is a huge gap down, so I will definitely wait for some time for this 20 EMA. Oh, sorry, this October 24th is a Diwali day. So we will move on to the next day. This next day, the market took support at L4 and it crossed CPR. So the market will be here. The market took support and it got rejected at H4, right? So this H4 will act as a major resistance. From there, the market has clearly came down. So you can take a call at this point or at this point. But moreover, this Camarilla levels are based on just 1 hour's trading session. So I don't feel that will give you a price action. So avoid taking a trade that day. And we will move on to the next day. The CPR is in downtrend, so most probably we'll see for a put position and see will it give us a trade or not. I think the market has clearly giving us opportunity because it is clearly breaking the H4. So we'll see, our target will be up to bottom CPR. Yes, it was reached. Clear target. And the next day is an uptrend CPR only, and where the market opened, it is a huge wick, right? And the market's opening is below H3, so there is a chance the market may not go up, but we need a reversal candle, right? So we'll wait for a reversal candle. If we see a reversal candle, then we can go for the put position. I think from this candle we can go for the put position and see. Yes, our target was reached. So the last day of October is coming. Here the CPR is in uptrend and the market opened a huge gap up. See, in October we have seen huge gap ups and gap downs. Okay, the market opened. Whether the market, yes, the 20 MA has clearly reached the market. So when the 20 MA reaches to the market, we'll don't go for a put position. We'll see. I think I don't take a call position also. Yes, we just avoid taking a trade. So overall, the market is giving us 4 no trading days. Can you believe it? This month is giving us 4 no trading days and 2 stop loss days. So what I'll suggest you is, in this type of days, you should sustain your capital. Don't look at making profits. Always think about sustaining your capital. Protecting your capital is more important than making a profit. So if you observe this, there are 4 no trading days and 2 stop loss hitting days. Thank you. I hope this video will help you. Please subscribe to our channel.